Welcome to etvFutures.com. Today is Friday, January 11th. I'm Caitlin Sisney with your Commodities Open. Crude in New York fell, heading for its biggest weekly decline since November, on speculation that a global economic slowdown will cut energy consumption. Prices rose earlier on a report of an attack by militants on a tanker in the Nigerian oil center of Port Harcourt today. Crude is trading at $92.93 per barrel on the NYMEX. Natural gas was little changed amid an outlook for lower temperatures next week to increase demand for heating needs. Natural gas is trading at 8.369 per million British thermal units. Gold futures topped $900 an ounce for the first time ever on Friday on speculation that the Federal Reserve will further cut its key interest rates, weakening the value of the dollar and increasing the appeal of gold as an investment haven. Gold is now trading at $895.40 an ounce. Silver is down at $16.285 an ounce. Today we're joined by John Kilduff from MF Global. John, what is your outlook for the commodities market heading into the weekend?
Caitlin, good morning. Well, my focus is generally to start off with the energies. I have to say that I have my corn cob pipe out on the desk this morning because the agricultural story is dominant in the commodities complex today, along with the stellar performance of gold topping $900 an ounce, briefly setting new records across the board. The agricultural report from the U.S. government today has corn up limit. It has the bullish forecasts for wheat firmly in place despite some of the plantings. So we're seeing a tremendous rally across the board in corn, wheat, cotton. Basically, you name it, if it's growing or is growing out of the ground, it is up substantially today. As is gold on the continued worries about inflation versus what the Federal Reserve will be doing in the coming weeks in their end-of-the-month meeting. And energy continuing to take it on the chin for the most part here, with crude oil getting below $93 a barrel earlier today. Our outlook on that remains considerably negative. We're seeing considerable weakness in some of the cash markets for refined products, especially out in the West Coast and California. While we are seeing some stabilization in heating oil, this looks more like a dead cat bounce than anything else. So it's right now buy the farm, sell the oil barrel, and just hold on for the ride with gold as it continues to make its climb as the inflation hedge builds in.
Thanks, John. That's all for your Commodities Open. I'm Caitlin Sisney. Join us later today for the Commodities Recap right here on etvFutures.com.